Box sees its revenue climbing up to $295 million in the fiscal year 2016 and reported that it's topped 50,000 customers. I caught up with Box CEO Aaron Levie.
We're definitely investing for market share right now. We believe that that investments today are going to pay off in building the dominant platform for the long term. This has already happened. You've seen the kind of market begin to shift where even companies like EMC, which are large incumbents in the storage and content management category, are exiting our space because of the dominant position we've been able to create. So we want to continue to invest in growth, but we did show some improvement and efficiency on the sales and marketing side this quarter. Sales marketing is now about 73% of revenue. It was that's a pretty dramatic drop from about 90+% the same quarter last year. So you're going to continue to see efficiency as the total customer base continues to grow. Remember, it's recurring revenue, so that as the customer base continues to grow, our sales and marketing dollars, focus primarily on new customers as well as upselling existing customers versus simply just maintaining that recurring customer base. So as revenue grows, you'll see continued improvements in efficiency on those core operation costs.
So, Aaron, the numbers are strong, but look, shares are still below the IPO price, and the stock is down today. Why is that?
Yeah, I think, we certainly have a lot of work to do to continue to educate investors on our business model, what the size of the opportunity is, really where Box differentiates. So this is something that I'm spending more time on, my co-founder is spending more time on. We're going after a tens of billions of dollar industry, but that industry is in a dramatic amount of flux right now. So Box is building the next generation content management platform for enterprises, but that's really the consolidation of categories like storage infrastructure, content management software, collaboration technology, and we obviously need to continue to educate investors on what we're doing, how we differentiate, and why customers continue to spend on Box as their key platform, and why we have things like 75% gross margins, which is we're fundamentally in a very differentiated software category, unlike maybe what some people think, like storage or commodity infrastructure.
Now, the lockup on shares was supposed to expire, as I understand it, after you reported, after the quiet period lifted. Is that what's happening? Are insiders selling, employees selling?
So the lockup actually expires next week, but we had an initial lockup that expired in July. So that was when outside investors and other investors and employees could sell. This is now the first time that insiders can sell. I think probably different investors and employees have different points of view. I personally am not going to be selling anything. I'm very focused on the long term of the company, and we see a tremendous amount of growth going forward.
Would you buy more shares? Would you buy any more shares at any point?
If I can scrounge up the money, absolutely.